Okay, welcome to the podcast. It is Leisa Erickson at Engel and Volkers in St. Pete and St. Pete Beach. Jane, we've got Miss Jane Floyd, Queen Bee of mortgage lending with me today. Jane, you want to tell our audience a little bit about yourself?
Sure, Lisa. Queen Bee. Okay, I could go several ways. I have been in the mortgage business for 32 years here in the Tampa Bay area.
Long time.
Yep, long time. I just pride myself on just having the most amazing team.
You do have a great team.
They're amazing, aren't they?
Takes a village.
So, it takes a village, yeah. And I absolutely love what I do, Lisa.
That comes through, for sure. Anybody that's ever met you and worked with you, that's absolutely the truth. And so that's why you're deemed, in my opinion, the queen bee of the mortgage lending industry. And you were just nominated, by the way, for some award. What did you get nominated for?
Oh man, Caitlin, which one was that?
Which one?
There's a
so
couple.
many.
Not to. I just try to ignore that. You know.
Oh, stop.
I think it's just the production, Lisa. Just some of the top lenders in the country. I don't even know what that particular one was. Elite women. Okay.
Elite women. Okay. Well, well deserved.
Thank you.
Yeah, you're very humble, but that's a killer award. So congratulations on that.
Thank you, Lisa.
Yeah. All right. So for our audience, let's get rolling. We hear it constantly. The question of the day, I know all of you want to know, is dun dun dun. When are interest rates coming back down? I bet you only get that question, 100 times a day? I'm going to wait.
Yeah, I'm going to wait and buy. That is the question of the day. And I got to tell you, some of the leading experts in the country right now have been all over the place on the answer on that. But as of this moment, so I believe that we will see one more rate hike. The Feds meet again the 25th. 25th, 26th. I know. Of the funds rate, Fed's fund rate. So I believe that we'll see that.
26th of this month?
Yes, 26th
so next
of
week.
July. Mm-hmm. Next week.
Next Wednesday.
Next Wednesday. Now, we've been seeing inflation itch down, which is exactly what we needed to see. However, I mean, that could change, but right now, all fingers point to they will probably raise again. And now here's what'll be interesting, Lisa, is what he says. What are they going to pause? Okay, meaning pause, which meaning like that's it until they start going down. And so to answer your question to the best of my ability, if he says that, and I do believe we'll see that hike, I think then we're going to see rates stabilize, okay? And itch down maybe just a tad. Because if you recall, Lisa, rates were supposed to go down in the summer.
Yes.
Okay.
I do remember that. And I was hanging on that idea.
As were most people, right? As were most people. So we had the bank failures, and then we had the debt ceiling issue, which now is postponed until 25, which is good.
We'll just delay that decision.
Delay it till 2025, right? So yes, we got a year or two good years coming up. So I believe if that happens, and also, so rates literally took a 40 basis points hike in June.
Okay, so let us, maybe I'm thinking that the people that are listening, maybe they don't know what interest rates are right now. So what's the current rate at? Like
Let me
your
just
typical,
give you for the moment, the average interest rate last week was literally 6.97. So call it 7%. So if you look at was the average interest rate last week.
Got it.
And that would be on a 30-year fixed. And then there's so many different factors, as you know, with buy downs and paying points and credit score and all that.
Okay, so 7%, and you said last month it went up 40 basis points?
So in June, because it went up 40 basis points when everything that was going on with the banks, right? So we actually peaked out a couple weeks ago, even 2 weeks ago, we were at like 7.25-ish. So we saw a little bit of reprieve last week, right? When CPI came out, Lisa. And so we're seeing that itch down. So
Okay. So, yes. So now we have a baseline. So we're at 7%.
Ish.
My first one was at 8%, by the way.
Mine was at, and I'm older than you, a buy down at 12.5%, but that was in 1981. I was still in college.
Oh, my God.
Yeah.
Okay.
1981, buy down.
Yeah, it seems nuts, doesn't it?
Crazy.
Yeah, 12. But anyway, we digress. Let's come back. We're at 7%. We were thinking that rates were going to come down.
Mm-hmm.
They have not.
Mm-hmm.
It was driven by, in your opinion, the bank collapse and sort of the economic, sort of like governmental debt ceiling. Mm-hmm. Okay. Maybe we're going to get one more rate hike. What do you think it might be, if you had to guess?
Just a quarter. I think they'll do one more rate hike of a quarter.
So it'll be like 7.25-ish.
Well, so when the feds raise it, it's the federal funds rate, right? So what the banks loan money on, right? So that's going to go to, let's see, is it 5.25? It'll go 5.5. I think it's going up so fast. I mean, the feds waited so long. This is the most it's gone up in a short period of time. So it'll go. I think it's at 5.25. It'll go to 5.5. So, but that's not what the fixed rates are.
It's not even a direct correlation.
Exactly.
Okay.
However, I think that again, if they say this is it, they're going to pause. We'll see a leveling out and maybe just a little bit trickle down, hopefully, through the end of the year.
Okay. So for anybody who's listening, I would think to myself, well, it's going to go up at some point. All things that go up, in theory, do come down. The question that we often get asked is, what do I do? What do I have a house I don't love, but I'm kind of here. I have this amazing rate at, maybe it was 2 or 3%. And I feel like I would be dumb. That's what people tell us. I would be crazy. I'd be dumb to leave this house and leave this interest rate, even though they absolutely desperately want out of it. So what's your opinion on that? I mean, when is it going to be a better day? Are we going to see those days of 2 and 3% in your opinion?
Lisa, that is the best question, and I have had so much experience in people asking me that. Mm-hmm. So first of all, I don't know if you know this, but 63% of the people with mortgages starts with a 2 or a 3. So 63% of mortgages out there are under 4%. So those are the people that they don't want to move, right? Mm-hmm. So we get that question a lot. And so it's twofold to answer the question, what should they do? And the sad part to me, if you want to purchase a home, if that's not the best home for your family for whatever reason, we all know, and if we don't know, you need to know, the number one way to create wealth in our country over history is real estate, right? Yep. So, and a lot of people also want to incorporate having more real estate into their portfolio. So, a strategy that we've helped people with is, you know what? Meet with your agent. We all know, and you may I'll ask you a question back in a moment. Rents continue to rise in the Bay Area, St. Pete, Tampa, all over, right? Sure. So keep that property. Use it as a rental property. Could even be an Airbnb, whatever. Keep that property in that phenomenal 2 or 3% interest rate, right? Work on getting that paid off so there's an income stream when you retire. And then we can help you strategize on a plan where you're going to get the money, work on all that, and then go buy the house that you want. And so, yes, so let's just say rate's 7% today. So obviously your payment's going to increase dramatically. However, we do have a 5-year rate pledge that we started last September. And so everybody that we started closing last September, rates were in the mid-upper 7s. I mean, if you recall, they were pushing 8%. So for the next 5 years, anybody we do a loan for, it's automatic. We'll be paying all lender fees. We'll be refinancing them. So get into a property.
Is there a number of times that you max out on that? I'm curious.
No. I just like, as you know me, I like to look for our clients to have, the lowest cost. Like I don't want to churn and burn someone. So let's just say hypothetically, my client bought and let's say rates went down, and we'll jump to that in a minute, in March. And let's say they're locked at 7 and rates just happen to go to 6, and it does make sense. We could do it then. However, if we see, again, we got to track with what are the feds, what are they doing? If I think in 3 or 4 more months, it's going to go down another quarter or a half. So we'll advise them on that. But the answer is no. There's no amount of times that, you can limit out on that.
I'm just curious
Make
about
sense?
that. Yeah. Well, I mean, I can appreciate that, right? I mean, I'm getting older, so I think about acquiring more and more real estate. I was never in that mindset, really. I was always in a mindset of like, I'll acquire property, renovate, flip it, do something with it, turn the cash back out of it, and move on. I was always that idea of just cash grabbing off of these real estate deals. Now I'm thinking, yeah, I probably should have held on to some more property. So I like this idea of investing. I guess, a lot of clients need money out of their current property, though, to buy something else. There's so much equity sitting in these homes right now in our market. So how would that work? Do you help them take maybe like a home equity line out of their current property to keep as an investment? How does that really mechanically work for them if they need the cash?
Great question, and that's again, it depends on the client. Some of them we've helped get equity lines of credit, just like you just said. Some people even have where they can get a margin loan, against assets. But if they have no assets and all their money's tied up in the home, absolutely an equity line is a great tool. And then we actually even we show them, we'll do the math, like, okay, here's the rent. And again, usually, what I'm seeing, the rent more than covers, right? The not only the first mortgage, but also the equity line of credit, and then pay that down, continue to pay that mortgage, that equity line down. So that's a great strategy. And then, you know what, Leisa, there's so many different types of loans. And again, look forward, we'll be refinancing. I mean, you can purchase, with, depending on the loan amount, you can purchase a property with 5% down, as little as even 3.5%.
I know,
3%.
It's crazy to see these programs because historically, a lot of people that have maybe purchased something in the past, they conceptually think that they need 20% down.
They do,
to avoid PMI, and that just isn't the case anymore. I've seen 3% conventional loans, which I'm like, wow, that's amazing. The 3% conventional loan, is that just for first-time home buyers that can do that? It's not that limited. Most of the 3% programs we have are for first-time home buyers, but we do have one investor that you can do 3% down, not being a first-time buyer, right? You do have income limitations on some of them, not all of them. And then you mentioned, Leisa, PMI. I just think it's an important factor to talk about, because a lot of people, just think it's the devil. Oh, let's talk. Okay, so maybe people don't know what PMI is.
Okay,
PMI,
let's talk about
private mortgage insurance.
Correct.
Right, and so it's a hedge for investor who might buy this loan to get an insurance policy, if you will, against the default potentially that they could have exposure to with less money as skin in the game by the buyer, right?
Correct.
So PMI, from your vantage point, what's going on? Because there's been a lot of changes in private mortgage insurance and the requirements for that.
Yeah. So, like Leisa said, a lot of people don't know that, Leisa, that it's default insurance just for the gap there, right, for the investor. But actually, PMI, private mortgage insurance, has come down. And for a borrower that has a very strong high credit score, it's really nominal. And so once you can get rid of it on a conventional loan, right? Once you hit a 78% loan to value, you can get rid of it as long as your mortgage is current. There are also different strategies where we can buy out of it, so if it makes sense. Personally, I don't think right now for most people buying out of it, especially talking in right now in the environment that we're in, that you will be, I believe everybody will be refinancing. So, and then let's just touch FHA. With FHA, that PMI was cut dramatically, almost in half. So for that person, if you're listening and you just have a marginal credit score, and so where with conventional, you're going to get hit on the interest rate if you have, marginal credit score, and your PMI is going to be higher. But with FHA, it doesn't matter what your credit score is, the PMI factor is the same. So, and we know that we're going to be refinancing, whether it's 1 year, 2 year. So basically, that's what PMI is. And I think the key point here, Leisa, is people think it's such a big number, and it's not if you have a high credit score.
Gotcha. Well, I'm going to change topics just a hair for a minute. So there were some investors. You triggered me to think about this. Investors were at one point concerned about purchases for second homes and third homes because it was going to become price just exorbitant. Did that ever happen?
So yes. So there's a couple things going on here. With second homes and with when you're talking about as it relates to interest rates. Okay, so if you recall, and it was the year before last. I don't even think it was. It was last year, maybe beginning of the year. So Fannie Mae imposed where a second home interest rate, Leisa, historically has always been priced the same as a primary home.
Yes.
Now, the down payment requirements were less. Right?
Yeah.
So you could get a second home with 10% down. That's what changed. So second homes are now priced the same as investment property. And it all goes back to, like you said, the risk with the investor. So to be honest with you, occupancy fraud is one of the people stating.
That's an interesting term.
Term.
What is that? What?
So
what is occupancy fraud?
So what is occupancy fraud? So occupancy fraud is that client, and this is back in before the 08, 09, when everybody was just buying real estate. You didn't have to have a job, all of that. Yeah. But basically purchasing we just talked about the strategy. I'm just jumping a second to put in perspective the strategy of truly renting out your house you're living in and moving to this new house. Well, it was so prevalent that people would say they were going to move into this second home or it was going to be a primary, but they didn't move into it. So when the market shifted, so many of the loans that went in default went into foreclosure, and then they start, looking at investigating. You disclosed you were going to move into it.
Oh, but then you changed your mind.
You never did. You changed your mind,
You
Leisa.
changed your mind. There was a lot of that going on, huh?
There was so much of it going on that you cannot even imagine. Yeah.
So why would okay? So they were doing it
to buy property.
Just to have it.
Remember, it was so easy. You didn't have to have a job, right? I can get a loan. I got a good credit score.
Let's just
I don't
get
have a
another
job.
one.
Let's just start churning and burning.
Yeah.
So, right. So we'll never see that again.
Interesting.
Yeah.
Okay. So we're going back.
Yep.
Got investors. It basically the rate now is at an investor rate.
For a second home is the same as an investor rate now. Correct.
If I want to buy one,
if you want to, so you got perfect credit, you're looking at anywhere 3/8 to 5/8, depending on your credit score. Higher interest rate for investment property, as opposed to a primary.
So it's not horrible.
It's not horrible. No, it's not horrible at all.
Everyone made it out to be doom and gloom. Oh my God, this guy's going to fall.
No.
The investment world's going to fall apart. Okay, I'm going to skip around.
Yeah.
We're getting signaled. I don't know. I'm not sure what it is. It's peace, love, and happiness.
Exciting.
I don't know.
Yeah. How passionate I am about real estate. I gotta say one thing before I forget.
Yeah.
I just in purchasing, Leisa, I'm so passionate. People say I can't. Prices keep going up. St. Pete, Tampa, right? Or they're going to go down. This is how passionate I am about real estate. My husband and I purchased another home last year. Purchasing another home we're closing on in a couple months this year. So it is an incredible time to buy real estate.
Well, I do agree with you. Okay, so let's transition. We're getting the signals of peace, love, and happiness over here. So let's just talk about the market for a second. Yeah. Just you and me. Okay, you and me just chatting. I agree with you 100%, right? I know you bought these properties. I think there's so many deals that you can make right now. I have never in 10 years seen so many seller financing deals. We've put many together.
Love it.
I know. And then I've seen lots of deals where there's huge amounts of credits, roofs being put on. Oh my God, the roofs. Can we just talk about roofs for us as just a second? If you're a seller and you're listening to this podcast, let me just say that whatever insurance you have right now, the new buyer, if you decide to sell, there's going to be things that are going to be coming up that you didn't anticipate, unfortunately, but it's going to come to you sooner than you think. You know, insurance, to get new bindable insurance for a roof that's over 15 years old is like nearly impossible. So if you haven't gotten that message from your insurance carrier, trust me, it is coming. You better start planning for a new roof. I have never put as many new roofs on a house for buyers and or sellers than I have in the last probably 6 months to 8 months than I have in many, many prior years. So let's just talk about like buying and selling. Mm-hmm. Deal making, I think, is possible. Are you guys seeing a lot of credits, things that are interesting on contracts you're seeing coming through? I mean, what's your vantage point? Like we see it from our side, but what are you guys seeing?
Same. And the roofs, you're absolutely right. I've in my 32-year career, I have never seen it. And I think that's because you're educating the sellers like, hey, you want this price, right? So getting in front of that prior to the listing, I'm seeing a lot of that. But I am also still seeing, I mean, if the home is priced fairly, multiple offers. I am seeing what we all see. This is when people say, well, it's not a good, I see price drops. And this is your lane, but here's what I'm seeing is I love to look at the data. The price drops are on those properties that the sellers, we all think our kids are the greatest and our houses are worth the most money, right? So, but they want to try high, right? List high. And then once you get to where fair market value is, that's when you're going to see the multiple offers. So, but the incentives, right? Right now, yes, I am seeing a lot of incentives. And roofs is the number one because of all the changes coming down the pipe.
Yeah, it's prolific, I have to say. So if you're in the roofing business, yeah, you're doing well. So that's unfortunate, but a true part of the business. So I think we're going to run out of time, but I have one more question to ask you. So condos. With all the engineering requirements for the Surfside collapse of what's happening here in Florida and all these buildings that are going through really some very challenging times, figuring out what their next move is for maintaining consistency in their developments. What are you guys seeing on the condo front here in Florida?
It's a great question. And to be honest with you, which I'm actually happy to say, at first it was so alarming, right? Oh my word, I mean, Leisa, I live in a condo. And I thought, oh, this may crush it. You know what? It's not, because these are things that needed to be done, right? And so we're lending, I don't know, I'd probably say right now maybe probably like 20% of my business is condos right now. So, I mean, it's depending on the project, right? And
for sure.
Right. I mean, after that collapse, I mean, these are things that needed to be done. So, your buyer can feel safer buying a condo if it can get through Fannie and, we can approve it, then, it's leveled out.
Okay.
Yeah. Yeah.
Do you think that the condo market, given all these changes, is going to take a hit? For the older buildings.
For the older buildings, I don't know. That's probably more your world, but I'm still seeing the older buildings come through. I mean, probably, but if they're getting in front of it, right, and getting the engineering reports done and getting everything, deferred maintenance. And I mean, some of those buildings, Leisa, were built like, a fortress.
I know.
Right?
I know some of them definitely were.
Some of them were. So,
yeah. Well, I don't know. We can sit here and round table our crystal ball. I just see the market as an evolutionary, breathing, thing. And, it's always interesting to hear your perspective of what's going on in the market and what you're experiencing, because you run a lot of business, and I know you see a lot of just transaction count, and you can see really what's happening. It's a good vantage point for us to have. So I appreciate you coming in today and sharing your wisdom and knowledge. And if people want to get a hold of you, how do they reach you?
813-758-8334.
All right, the Queen Bee of Mortgage Lending, Jane Floyd at NFM Lending. This is Leisa Erickson at Engel and Volkers St. Pete Beach. Tune in next time. See you soon.